Hey traders, it's Leaf West. I'm doing this video in response to an email I received today from a guy named Terry. Terry's, I think, a newbie trader kind of guy trying to learning how to trade in the real world, and he had a tough day today, and he's had a tough couple weeks, I guess. He had a trade he thought it was well thought out. It was a short today on the break of. If we look, here's the 3-minute spiders, and he was looking at this low from Friday, late Friday afternoon, 134.85, and he shorted it on the third test of that level, which I'm looking at today's action, and I'm thinking his third test was, this was the first test, that was the second test, and then this was the third test here. And I I've never really been a big believer on playing breakout trades. More, I think they work more on the bullish side on a bigger chart sense. But and when you do that, you have to trade it on a bigger chart. But if you're looking at a 3-minute chart where there are a lot of minor waves, I think it really is a tough game. For example, if you're just to look at, okay, Friday's low was here. We broke Friday's low here and the market reversed, right? We broke today's low here and the market reversed. We broke the earlier swing high here and the market reversed. And we broke the swing high here and the market sold off into, well, there's only one last bar here, so we'll see what happens. Yeah, the market's roughly where it was at the end of the day. We were on the right around where it closed. So I just think it's a really tough trade to play continuations in that way, and playing the break of a level, especially an obvious level. At an obvious level, people will, the saying goes, at an obvious level, the obvious thing is obviously wrong. That's a mouthful, but the market is, it's, the algorithms are set up and written to catch people with their stops. What you do is they come down here, they get everybody's got their stop 1 penny below the low of the day, takes them out, and then rips it the other way, and then sells. But here they take out all the people who were short, make you cancel your shorts, and then they rip it the other way. Or they get people trying to get long on the break, and then they rip it the other way. So that's just what the market does. So I would much rather suggest that traders plan their trade out in a entirely different way. I think you should sell into resistance, or if you want to play breakaway trades, you have to let the trade happen and be patient, and then get involved after there's a clear, obvious sign of weakness or strength, or in today's case would have been the weakness. So if you had a bias coming into today that we were going to, especially after the market opened, bad news all over the place, Spanish yields are up, market looks weak, bad economic results happening all over, and the market, big first couple of candles, goes down, looks like it wants to test the low, right? So you sit around and watch the market for the first 15-30 minutes. It tests the low and has bottom lower legs on these candles, showing that there's not any follow through to this move on its first attempt, right? Then what do, right? You just draw your retracements and wait back and see what happens. You expect, so we've got a new low here. We expect price to have resistance on it, so we look for price to get into this area here, this 50%, 61.8 and 78.6. Normally we like to see two legs up, right? The first leg's usually around 50, then it pulls back, and then we get push into there. And ideally for me, this is the area to short right here after two legs of price structure into the slot area, and if we get some weakening internals, that would be perfect. And then what you do is you look for a reversal candle and short on the break of that. So here we had one push up, which is not great, which is emotional, which is pretty much like the motion we saw off the start, but that's what happens during the first part of the day. But we did have a doji, and price did not break the high of that doji, and it took out the low of the doji at 135.24. So if you're really gang ho on shorting, this is a place to short, because what's the worst that could happen? Well, the worst that could happen is that price corrects and then finishes up here. So if you have a stop that's above the 78.6, if you're wrong in your directional bet, then you're going to lose. This is 27 at 60, so you're going to lose 30 cents. So that's the spot to me to do it. The more obvious spot to get whipsawed is down at these levels, because what could happen is price could come down here, go back against you, and go, oh my god, it did it again, it faked me out, it's going to go higher, and then it goes, right? So to me, the spot for most people to short is either in resistance, or if they want to play the continuation momentum game, is you wait for a clear break. And this wasn't a clear break, it was barely past a couple cents, one or two candles past on a 3-minute chart. It's not a clear break. A clear break shows weakness, and then you want to play the bounce up there, so you have way better odds that this trend, if this is what happened today, this trend continuing lower if you saw this kind of price action. Seeing what we happened today really wasn't a confirmation. Actually, you should have, if you're unbiased, which I'm not sure Terry was, it's not like he thought it was going to go lower, which he had perfect answer, perfect logic for his thinking that. But if you were to look at a couple things, well, anyways, to me, waves move in ABCs or 1, 2, 3s, right? So if you look at from the high on Friday, what did price do? It made a A, B, C, right? And how I look at whether this is a good completion spot for that. Well, first of all, you would think that this would be a possible correction completion area, because it's just below the prior lows, which is what the market does. You just have to know that. But if you were to say, okay, if this is an ABC, C's typically are at, right, they're usually at 1.272 of this. If this is A, B, C, take your B to A, reverse extension, and that's 1.272 usually. That's where it usually is. And you can also do price symmetry. Look at prior moves down, right? So if you look at, I have this price symmetry here at 134.75 from this wave right here. This move into Friday's low, I measure from top to bottom, and I put it at the top here. That gives me a target here. And you can do the same thing. Excuse me. You can do the same thing from the high on Friday, or the opening today, and go, right? Oops, that's a trend line. I don't want to do trend line. I want to do an extension. All right, let's just do an extension. So we go from the top to the bottom, and you draw it here, right? And then it's going to have that, but I don't want that. I want 100%. All right, let's draw it there. So that was another price symmetry. So in theory, we had 3 spots today where price could find support. If this was an ABC down, price could have found support here at price symmetry, could have found it here at a C wave extension, or it could have found it here at another price extension from this first wave down. So at this point, C would have been equal to A. Anyways, so those are possible areas for support. So I'm not sure I'm getting to, but anyways, so that to me is, do you want to be shorting the market at a possible support area? And I would say no. Again, you want to short into resistance, and then ideally, if you'd shorted up here or started your short up here, when you failed to break through this first logical resistance area or support area, then you cover part of your short, or cover it all, or whatever you want to do, however you want to manage your trade. If you don't have a big account, maybe you want to take your profits whenever you see your profits. The easier trade to do after you fail to get confirmation on that move was that when we bounced and then we failed to go lower on that bounce. So here the better trade would have been to say, all right, when we failed to roll over and die and continue down lower, what does it do? Well, the market will go the opposite way, right? It's not going to break down, it's going to trend the other way. So it breaks this, and what happens? Well, you think it should go. The first place you should go is your prior swing high, or something like the bottom of your opening range. And anyway, so that's just looking at the short-term chart today. That's the issue I think that Terry had, was that he's shorting it. He's shorting the market in a fashion that I think is has low probabilities for success. And then the other point is, if you look at a bigger chart, let me just pull up a bigger chart here. All right, so this is my 15-minute chart. So this is actually a chart I used for a blog post I did on the weekend, and I looked at, I took some price symmetry from earlier. I'm not even sure where I got it from. I can tell you here. Okay. Anyways, and I guess this is where it was from. I looked at this price move down, and it made a move down, bounced, made an A, B, C wave higher, and then rolled over. So I did the price symmetry from the bottom here to that high, and I did it off of Friday's low, which was there, and that was which gave me price symmetry at 135.72, and price made it to 135.70 on Friday. So that was pretty close. And then I did symmetry from the bottom here to the top of the ABC, and I did that from the bottom on Friday, and that gave me a resistance of 135.96. So to me, I had a plan already in place that if price made it up here on Monday morning and rolled over, that I was going to short it against these levels, because that looked like a weak market. Get away from the fact I got these extreme trend candle warnings that we should see a counter trend bounce, but that to me was levels to short against. And then if it made it up to this level, if it did an ABC up to this top level, based on that level, this is where my target would be: 134.55, 134.17. So I'm not sure what Terry was doing, but I guess the point of the matter is that I think, again, when he's looking to short the break of this congestion, if you look on a 15-minute chart and you say, okay, this is where he tried today to break short, there really wasn't any sign of strength behind it, and it was really only signs of weakness behind. But for him to short on the break of this structure, you have to be counting on the bigger time frame, the daily chart, to kick in and to drive it to new lows. So if he was playing, and I think he was playing a short-term trade, because he was playing with options and he doesn't have a big account, so I think he wants to get in and out relatively quickly. If it keeps going, great, but my bet is that was what he was thinking, that you really have to say, okay, on the 15-minute chart, your best place to short is at areas of resistance. Like if you were to look at MACD, he shorted. All right, so here we had the first move down on Friday, made a big momentum low, right? So what happens? It tells you that we're going to make lower prices to come. So we actually made lower prices as momentum was gathering strength again. But look where he shorted. He shorted right here, where we actually made, I wouldn't call that a three push pattern, but it's the third sort of lower, or the third bottom in the pattern, and it was a low price. So to me, clearly, if you look at this, if he were to look, I don't know what indicators he has up, but I wouldn't be shorting a break of a obvious low when you have less momentum. What you want to do is do something like this. This is what he wants. This is what you should be doing, is that when you have price, it breaks, there's a structure A, B, C, and look at this. Momentum is lower than the first move higher. And that is where you have the odds in your favor. And if you can find a level, what was the level here? It was the 78.6 level, right? So this is what I was talking about on the 3-minute chart. I like to see A, B, C, two-legged structures into resistance. And that was, here was your signal to say that's where you should be putting puts on. And then boom, you make some good money on that. But he's playing a break of an obvious level with momentum going against him. So anyways, I've rambled a bit here. The video is pretty long enough. Let's take a look at, before I do that, let's just take a quick look at the 3-minute chart on momentum and see if it give him any, hang on a sec, guys. Sorry about that. So just to finish this off then, let's look at momentum and see what happened. at the low where he shorted it. And I think he shorted it here, right? Again, we saw it on the 15-minute chart. We can see it more clearly here on the 3-minute chart. This really was a low risk, or I'm sorry, a low odds kind of trade. He really was counting on obviously momentum to follow through, but momentum was actually waning, and then he should be almost thinking the opposite, that this is an obvious level that people are going to try and short, people are going to get stopped, and he goes, I should be looking to buy this, because even if it just gives me a snapback bounce, you make quick 30 cents, and Bob's your uncle. Okay, so Terry, I hope that helps you, and if you want to, I'll be happy to have a lesson with you where I go through, and you can watch my screen while I trade all day. So get a hold of me if you want to do something like that. Okay? Take care. Bye.